During our stock analysis, we are going to explore the key pillars, examine the ownership, look back at past results. We will find out what the analyst predictions are, as well as give the business a valuation, and examine the potential return on our investment. And finally, we will summarize our findings. Let's start by looking at the key pillars for the trailing 12 months. In the book Rule 1 by Phil Town, he suggests these are the key metrics when first evaluating a business. The first pillar we are going to explore is earnings per share. This is where we take the net income and divide it by the shares outstanding. The higher the number, the more profitable the company. For Edwards Lifesciences, this is okay for the trailing 12 months, but has only grown by 5%. Ideally, we would like to see the growth for each of these metrics increase by 10%. Now, let's look at the free cash flow, which is the money a business can generate from its operations. And here we can see Edwards Lifesciences has not been able to increase this, as their free cash flow is down by a massive -58%. Then we come to the next pillar, which is revenue. And this tells us how good the company is at generating income before deducting expenses. Edwards Lifesciences' revenue has increased by 4% in the trailing 12 months. Then we come to book value, which is calculated by subtracting the total liabilities from the total assets, and this indicates equity growth for the company. As for the last 12 months, their book value is up by a terrific 12%. Now let's turn our attention to the management of the business by looking at the return on invested capital and return on equity. These two measures allow us to assess a company's efficiency at allocating the capital under its control. Return on invested capital and return on equity are superb at 18% and 20%. Now we move on to debt. And Phil Town prefers a company that is able to pay off debt with their free cash flow within 3 years. So, using their current free cash flow, it would take them just over 2.5 years to pay off the debt. In this next section, we now focus on other key metrics which help define an excellent business. Now let's look at the gross margin, which is the amount of money a company retains after incurring the direct costs associated with producing the goods it sells and the services it provides. This is currently 78%, and this is excellent, as we would like to see the gross margin over 40%. Next, we come to the operating profit margin. This tells us how much profit a company makes on $1 of sales after paying for costs of production, such as wages and raw materials, but before paying interest or tax. Their operating profit margin is fantastic at 30%, and is well above the ideal 14% we would like. For Terry Smith, free cash flow yield provides a more realistic view of a business's financial health and profitability. He typically looks for companies which have a free cash flow yield of 5% or higher. So, at 0.7%, this is a lot lower than we would like to see. As we are potential shareholders, we will now want to look at the average book value growth for the last 10 years. This is 13%, with the lowest point being last year at 10%. And lastly, Bill Miller believes earnings growth is the biggest indicator to a company's stock price. The average growth for the last 5 years is 12%. Therefore, later on when we create a valuation, I will use the lowest of these two average growth numbers to help project our future stock price. In the comments section, I've included a link to the investors page in the annual report, if you want to check it out for yourself. This is Bitesize Investments, giving you a step-by-step approach on your investment journey. There are currently 4 super investors who own this company, and between them they invested $494 million in Edwards Lifesciences in Q1 of 2024. If we look back at Ken Fisher's previous sales and purchases, we can see he has both bought and sold shares in Edwards Lifesciences in the past few years, and has added more shares to his portfolio in Q1 of 2024. He has a small position invested in the company, which represents 0.24% of his overall portfolio. However, 6 other super investors have sold shares, totaling $86.3 million in Q1 of 2024. Ray Dalio has previously bought into Edwards Lifesciences, but in the last quarter he sold 418,000 shares. He sold 46.2% of his holding, but still has 31 million remaining in the company, which makes up 0.16% of his overall portfolio. With the stock sinking with its last earnings call, it looks like this was a great decision. Now we are going to look at the past historical prices of the company, as this will help us build a picture of periods of success or failure the business has been through. We can see that Edwards Lifesciences have seen some great growth since 2014, but since the high of 2021, they have struggled to recapture that momentum. Up until their recent earnings call, they had got back to the heights of 2022, but have since dropped to their lowest share price since October 2023 and March of 2020, the start of the pandemic. So is this a good buying opportunity? On average, the analysts believe that the price target should be about $83, but some believe it can go as high as $107. analyst reports suggest that Edwards Lifesciences is undervalued at the moment. And the overall consensus is they are a buy. Collectively, the analysts believe the company will continue to grow between 9 and 24% over the next few years. I will use the current earnings per share of 2.42 as my starting point when creating a valuation. Based on a combination of the past growth, future analyst predictions, and the average book value for the past 10 years, I am going to estimate the earnings per share growth to be 12%. Then, I am going to give Edwards Lifesciences an estimated PE ratio of 40. After that, I will project these numbers forward by 10 years. We then need to include a 15% return from our investment. This then gives me an estimated future stock price of about $301 per share, for its future share price. And then we work out the current value, that Phil Town calls the sticker price, which is about $74. Then we apply a margin of safety. At 25% it gives me a buy price of about $56. As we can't rely on just one valuation model, I'm going to dig a little deeper and gather some more information. If you found this video useful, please consider giving it a like, or click on the link above to check out my last stock analysis, or continue to watch as we are going to look at the possible return, and compare the bull and bear cases. The return we would receive, if we bought at our 25% margin of safety price of $56, and sold in 10 years' time at our estimated future stock price of $301, would be 438%. But, this is dependent on our assumptions for the company being correct. In addition, Edwards Lifesciences don't currently offer a dividend. Let's find out more about the company, and its competition. According to Morningstar, Edwards Lifesciences have a narrow economic moat. Even after the recent earnings calls, analysts have given the company a price target of about $85 and are suggesting Edwards Lifesciences are a buy. The current management of the company looks good, statistically, as their return on invested capital and return on equity are both quite high. In addition, they own about 65% of the market share for transcatheter aortic valve replacement, which is one of the company's specialist areas. Now let's look at the bear case. The healthcare sector can be a little bit volatile. Global events, regulatory changes and shifts in investor sentiment can cause investor sentiment to plummet. Edwards Lifesciences operates within a highly competitive space. Rival companies are constantly working on their own heart-related innovations. And lastly, their recent earnings call has been lower than expected, and resulted in the share price dropping over 30%. But does this represent a buying opportunity? If you have enjoyed the video, it would be greatly appreciated if you would like and subscribe to help the channel grow. And finally now, we'll summarize what we have found out about the company. When reviewing the key pillars, Edwards Lifesciences scored 8.5 out of 12. Under ownership, 4 super investors have bought in the last few quarters, and 6 have sold shares. However, none of the investments constitute as major holdings within their portfolios. Their average share price is in a sideways trend, but based on their recent earnings call, they have dipped to previous market lows of 2020 and 2023. And analysts are indicating Edwards Lifesciences is a buy, and they are predicting they will grow between 9 and 24% in the next few years. Using the EPS growth model, my personal buy price was about $56. However, for full disclosure, I have bought back into this company since their earnings call, and my average purchase price is $63.83. I intend on buying more if they go below this price. I personally don't see them going much below the $60 mark, but you can never be 100% certain. If you click on the link above, you can find out about my personal portfolio. According to Morningstar, Edwards Lifesciences have a narrow moat, and my final overall rating is 4 out of 6 stars, and I have given this a category A rating within my own stock watch list. Thank you for joining me during this stock analysis video. As I'm a relatively new channel, please consider using the comments section to help me develop the content I'm creating.